Hey traders, Jim here. Just wanted to go through a trade I made today and talk a little bit about rolling options again. And if you're doing 45 days out like I do, a lot of my stuff I'll wind up rolling anywhere from 20 to 30 days. And we're not holding out for every last penny. We're trying to get the most use out of the money that we're trading with. So before we get started though, I want to go over this disclaimer. This presentation is for educational purposes only. So it doesn't constitute any financial investment or legal advice. Options trading involves significant risk and is not suitable for all investors. You may lose some or all of the money that you invest. Past performance is not indicative of future results. Always do your own research and consult a licensed financial advisor before making any investment decisions. OptyTrades is an educational resource and does not manage client funds or provide personalized investment. Let's get started. So if you look at this image on top, this is a snapshot from my Thinkorswim account. You can see that I bought one to close SOFI May 15th for 28 cents. Okay. And that's $28 basically for one contract. And then I opened, and this was, by the way, the May 15th, and I went and I opened the 21st of August, 23 calls for $1.40. That's basically rolling. I did them individually here, try to capture the most premium, but you're basically rolling that covered call. The stock is significantly under this, but there's a lot of premium that's available in this stock, so we take advantage of that. Now, let's go and let's close this window, and let's look at OptyTrades for a minute. And let's hop over to SOFI. So if you take a look at SOFI, we're now at a position where I own 300 shares total. My average cost is $14.67. I got put one at $23, 100 shares, and I got put two at 17s. So that cost basis, and then the covered calls I've been writing on all of those, and the cash secured puts that are already closed, none that are open, just the ones that are closed, has brought the cost basis of the 300 shares down to $14.67. Pretty happy with that. Unrealized profit and loss, which is the stock price, $14.50. That's it. And the reason why it's that, even though I was put to 100 shares or one contract, basically 100 shares at $23, the reason why it's only $14 is because the other two contracts at 17 brought my average cost down significantly. So we're in the money. Net premiums, $1,400 on this. Closed positions, those are all of the exact closed positions are $499. But these are the premiums that we have on the books that we're waiting to close. Okay, so just a great trade today. Now, if we go over to the journal itself, let's head back over. And if you notice, we've got 63% deployed still. That's it. The rest is in a high yield money market. And return on deployed so far, 11.07%. Annualized, we're looking out to be about 36%. Return on account, this is not including the money market funds, 7.49%. Since we started January 8th, and then average return on account for the year, we're looking towards 24.85%. That is not reinvesting. That's without reinvesting. So I stay really conservative on this so that hopefully we beat that number. Now, if we go down here to the SOFI, you can see there's our cover call at 23, made 139.45 cents after commissions. And then if we look at closed, you'll see we bought back the 23s. So the $108 here gives me, if you hover over this, the original cost basis was $137 that we were paid. And if you see the minus 28, we gave back $28. So now we made $108 on this trade. So it wound up being, even buying it back at $28, it wound up being a 24% annualized return on investment. Not bad. Pretty happy with that. All right, that's it for this trade. And today, come on over to www.optytrades.com, sign up for a free trial. And we've got a lot of neat stuff here. And I'll have some videos coming out for this again real soon. Have a great day.